evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will try to complete the setup involving the indicator Parabolic SAR extended. This is going to be the third and the final session involving these indicators. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA to make the algorithm development easier. In last two sessions, I had explained to you how we can get the instrument subscription done, where the Euro USD was being used as the instrument of choice. Afterward, the position amount was defined at 0. I have added these two SAR extended indicator blocks with the hourly candle period and the lookback period of 1 and 2 respectively. All other parameters have been left as per the default setup. No tinkering has been done with these values. To look at the price volatility, these get historical candle of 1 hour and 10 seconds each have been added. And afterwards, the new variables were created with the pip value of 15 and 30 to define the requirement, which I will give you a refresher briefly. And on the lower side, these if blocks were utilized to set the conditions for the execution of the buy trade. Now I will give you a refresher of what the logic is going to be for the execution of the sale trade. It's fairly simple. We are relying on the SAR extended output value to guide us through the trend, whether it is bullish or bearish. We will relying on these SAR extended output values to determine that. And for any sale trade to take place, we need the last hourly candle close to be below the prior hour's SAR extended output value. So we will rely on the closing value. And why closing value and not the low value is because if the close is happening on the lower side, that means in that particular hour the trend was sustained. So that gives us additional confirmation of sort that the trend is sustainable. So that's why I'm using the closing value and not the low point of that hourly candle. And also to make sure the momentum is good enough to take the trade, I'm also requiring that the difference between the opening price and the closing price should be above 15 pips. But at the same time, we have to make sure that we don't end up getting involved in the trade after a substantial move has already happened. I'm capping it with the upper limit of 30 pips. So the difference between the opening price and the closing price will need to be in between 15 and 30 pips. The closing value, of course, I don't think it is needed, but still I will remind that the closing value needs to be lower than the opening price. So that's the logic is kind of simple. And I think given the improvement compared to the SAR parabolic SAR indicator in parabolic SAR extended, we can more or less rely on these breaks. But of course, not every time the trend change will be holding. Sometimes it might happen that it is going to simply remain sideways. To avoid that kind of situation, I have added these volatility requirements. Okay, now so we head back to the Visual JForex board and get our execution part done. So for that, I'm going to need 7 of these if blocks and then the trade command block. The formation on the sell side is going to be mirror image of the buy side. So let's now get to the job. 7 of these. Five, 6, and 7. And afterwards, the open at market trade command block. All right. Here, the closing value of the candle 16. Candle 16, candle close needs to be lower than its open price. So first input less than second input. The candle 16 candle close also needs to be lower than SAR extension 1.5, which has a look back period of 2. Again the first input less than second input. Now we also have to calculate the actual difference between the opening and the closing price. For that I will have to get the calculation expression block and get the actual difference calculated. So we will be deducting candle 16 candle close from the opening price, as the opening price is going to be greater than the closing price. Open and close price, and the calculation will be A1 minus A2 actual difference of the sale side. I will join back to the multiple action. Now whatever is the difference between the opening and the closing price, it needs to be compared with the predefined values of 15 pips and 30 pips. So this is the output value of 15 pips. Here the MPC has been assigned a start value of 15, which has been multiplied by the default instrument pip size. So this value has been arrived of 15 pips. First input greater than second input. Afterwards, difference also needs to be lower than MPD1, which is the variable carrying a start value of 30 pips. So it becomes first input less than second input, and we need the last hour's opening price to be lower than the output value of the SAR extended for last hour. So we need to compare the candle 16 candle open with the SAR extension 11. First input again less than second input, and as and when price starts to drop below the last hour's closing value, the trade initiation will happen. So that is the condition for which we are again going to need the candle 16 candle close value as the common input in both of these logical blocks. So I will take candle 16 candle close here and compare it with 10-second historical candles, which are Candle 17 and candle 18 respectively with the look back period of 1 and 2. Candle 17 has look back period of 1, that means it is the last 10-second candle. Candle 17 candle close needs to have been lower, first input less than second input. And candle 18 candle close needs to have been on the higher side, so the first input greater than second input. Let me arrange all these blocks on the lower side, which is not going to take much time. This is going to be a sell trade, so I will change the trade command to sell. Trade amount to 0.1 million. Default slippage will be 2 pips. Stop loss and take profit, we will keep it same as was the case with the buy side trade command block. This is going to be in the risk reward ratio of 2:3. Stop loss of 20 pips, whereas take profit will be of 30 pips. Alright, that's it. With this, we have defined the mandatory parameters for the trade command block. And with this, I think I am done with explaining the instructions which need to be followed to get the setup done, and to make sure that the trade iteration flow is going till the very end. Let us check it once with color coding, and yeah, it is all right. So that's it from my side for today's session. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these useful links have been provided in the bio. Thank you all. See you next time.